Good morning. There's the opening bell, and welcome to Trading Futures. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Michael Fairborn, and we are off and rolling this morning. Thanks to all of you for being here, whether you're a usual suspect or whether you're here brand new or in the live or the recorded version. We appreciate you being here. Thanks for joining us. We've got the chat going on. Mike's going to be there to help answer your questions, and a couple of things are starting to move. This morning, we're going to take a look at those here really quickly, and then we're going to come back and we're going to take a look at what's going on in the market. But first, before we get into that, really quickly, a couple of housekeeping items. Remember that everything we talk about simply for illustrative and educational purposes only. It is not any kind of a recommendation or personalized advice. Remember that futures and futures options trading involves substantial risk. It's not suitable for all investors. Make sure that you're aware of that and read the risk disclosure statement for futures and options. Now, here's something to pay attention to as we get into this discussion. I wanted to cover a little bit about cryptocurrency, specifically Bitcoin futures this morning, but I wanted to point out the fact that virtual currency derivatives, including futures, involves unique and significant risks. Be aware of that. Read the NFA investor advisory and the CFTC customer advisory. The link is there. It's also in the description of this webcast. But I wanted to talk about that in light of the moves that futures market has been making. We're going to be using the Thinkorswim desktop software platform here this morning, specifically the paper money version. It is a great sandbox to play in. It is not, however, a guarantee of future success. Also, remember, the technical analysis isn't the only way to look at the market. All of those methods of looking at the market are theoretical in nature. None are guarantees. Now, when we talk about stops as they relate to futures markets, remember that stops behave differently in futures markets. Stop orders, once they're activated, get worked as an exchange designated limit order as opposed to a market order. That means that sometimes those orders will get rejected. Sometimes they won't fill at the price you expected them to fill, but it is a matter of protection on the part of the exchange and the broker to manage that potential risk, especially in a fast-moving market. So we'll point that out as we get into the discussion. But our general agenda today, we're going to talk about the futures market. We're going to look at some example trades, including some that we have played with and talked about in the past. But let's jump into the market here really quickly. And I wanted to jump right into this discussion. This is a futures contract that we've been looking at before, but it seems to be making a little bit of a move here this morning. This is the Japanese yen futures contract, and you can see this general uphill trajectory on the long-term chart that this particular contract has made. In fact, it's been bouncing up off of this diagonal downtrend or uptrend line for the course of maybe the better part of 2 months when it comes to kind of that trend direction. So left-hand side chart is a one-year daily chart. Right-hand side chart is a today 5-minute chart, just kind of narrowing in on that focus. But here's what I happen to notice happening here. From a bullish perspective, we saw this rally up, a little bit of a pullback, so a W type of formation, a kind of a big, broad W formation. And we got a rally up through that level and a pullback and a retest, and a rally up and a pullback, and it appears as if now we're kind of at this confluence, not only of the diagonal uptrend line, but the horizontal support line at this particular point. That's the level that I've drawn in here, and I'm going to kind of shift over. But before I do that, before I shift over to this shorter term chart, I want to open up this side and take a look just at our contract specifications here. Now, I've got this label. I've put this futures contract label in the description for this webcast. So if you want that, you can go there and download it. Remember, anything that we share is for illustrative and educational purposes only. It is not guaranteed as to time or accuracy. But this would tell us that the notional value of this contract is relatively large. I mean, this is a currency contract. Tick value is $6.25, and you can see the point value, right? So this is a big contract, and when it moves, it can move fairly quickly, although it doesn't seem to move in a fairly large range on a daily basis. But now let's kind of shift our focus over here to this intraday time frame, and we can see what's going on. So my thought in this particular perspective was taking this bounce up off of the support level. And we just got a new candle here. These are 5-minute candles. So we're into this kind of movement of the market, a couple of minutes here and a couple of candles. The bounce off of that diagonal uptrend line, which has kind of been what's going on. We can see it touched here. Saw a little bit of an excursion here. So my thought was trade the short-term move back up to this resistance level as a short-term move. Now, there's the potential to take this as a longer-term trade if it moves back up towards the top of this channel. We could argue that that channel is there, maybe up to that 0.0068 mark. But in the near term, we're going to look at taking this to this 0.0675 level, that previous resistance. And you can see what momentum has been doing. Momentum has been gaining slightly to the upside. So we're going to look at stopping this. Remember the challenges of stops with futures. Stopping this if this goes against us just a little bit here, down to that 0.6736 and below, we're going to exit. And we're going to look at getting out on a take profit potentially if it moves in our direction up here at the 0.0675. So we're going to build a bracket order here really quick. On this chart, we're going to buy a custom with OCO bracket. Now, this is being done in our paper money account. So we know where our entry point is. It's right here. We're going to take our take profit exit right here at 0.0675. So we'll just adapt that here. We'll just do 0.00675. Let's make sure we've got our decimals in the right place. And we're going to make that good till canceled. And we're going to make our stop this level right here, 0.0673. And this is going to be theoretically a rapid trade, but doesn't have to be. Now, is this the only way to trade this particular perspective on the Japanese yen? No. A trader could look at trading that longer term perspective back to the top of the channel or the longer term upward trend in the channel. But we're going to trade this short term bounce. 0.0673 is our stop point here on the downside. Remember, these are going to get worked not as market orders once they trigger, but as exchange-driven limit orders based on the protection points for those levels. So there's a risk potentially that these could not get filled, and especially in a fast-moving market. But we're getting to the point here where the yen futures contract, because the Japanese market is closed, it is moving in a little bit more sedate manner. Doesn't mean that it can't move in a more quick fashion, but we're going to create this trade. We're going to read through this order, make sure that that's what we want to have occur here, and we're going to put this in our futures group, and we're going to fire that order off and see if we can get into the trade. We might have to bump that limit order because it moved a little bit on us here. So we're going to come over here to the monitor tab, and we're going to cancel and replace this entry point here. So we're going to do a cancel replace. We're going to open that lock up a little bit, and we're going to click on confirm and send. We still have the trigger points for the other orders, and we're going to fire that order off and see if we can get that to fill. And it filled, and so we're in at 0.06746. So that's the potential for that move to the upside. That is now working. These two orders are now working orders. Let's go back to the chart. And if we do this, let's go to show orders on the chart and apply and okay. You can see where that trigger is here and where that trigger is down here on the bottom to get out of the trade. And the perspective is this is either going to move up or it's going to move down. We're either going to get in and stay in that move to the upside, or we're going to get out as it moves to the downside. So let's talk through this, right? From a technical perspective, this is simply a support bounce, and we're trading that support bounce to that upside potential move. The other side of this coin, and that's what I was saying, is this is not the only way to trade this, would be to trade that longer term move to the top of that channel, or to trade this in a longer term perspective, because I know some traders in attendance today are longer term traders and saying, you know what, the intraday stuff, I don't want to worry about that. I simply want to trade that trend. A trend trader could potentially trade this in that upward movement. Now, the risk obviously is this is sitting at a support level. Support can be broken, and we could see this as a resistance level because it's likely that there, if we check left to confirm what's going on over here on the right hand side, it's likely that there's a little bit of a resistance here at that 00685, which kind of is the top of the channel. So a trend trader could see some oscillation within that channel as that channel moves higher. The other thing that I notice here from a risk perspective is the CCI, that commodity channel index, which is a momentum indicator or trend strength indicator, seems to be tailing off just a little bit here. And so we're seeing a little bit of weakness flowing in here to potentially the longer term trend here on the Japanese yen. But that's something that we can pay attention to as we take a look. The other thing that I was looking at potentially is an initial trade here. And I think, and I'll share this future movers grid. I've shared this before, but I'll do it again. So Villager talked about James Boyd talking yesterday on X. By the way, you can follow me on X. You can follow James Boyd on X. You can follow Michael Fairborn on X. I'm at Ben Watson CS. Michael Fairborn is at Michael Fairborn CS, at James Boyd CS. You can follow us over there on X. By the way, speaking of follow, click on that subscribe button down at the bottom of the page if you haven't done so already. That way you stay connected to this Trader Talks webcast channel and that community. But James talking a little bit about the fact that copper potentially can be a canary in the coal mine, right? There's a reason for that. Michael outlines that greatly here. It is an industrial metal and construction, manufacturing, computers, infrastructure, electrical generation, and electrical power transmission. So copper is something that is of pretty vital importance, right? So let's look here at the /MHG, which is the micro copper futures. Now, let's look at the risk here from this perspective. We can see that our notional value of this micro copper contract is 12,496. What that means, though, if we were to look at /HG, which is the big contract, is you can see the difference here. This is a bigger, the full size contract, right? The /HG. So we're going to look at /MHG, the micro contract, and we're going to put it back on that grid. I'm going to restore these. So you can see that upward trend, right? And copper has been advancing as greater demand has been coming in for power generation, as, for instance, China perhaps has been stimulating their market. That's a big driver of copper prices. But here's what I noticed this morning in copper, and I'm going to zoom in on this right-hand side, that it seems to be kind of bouncing up off of this support level, right around the 4.99 mark. And there seems to be a little bit of a resistance here at 5.01. And momentum kind of seems stuck here. So this is kind of a technical toggle point, right? My thought was that if this bounces and we get a little bit of a move higher here, that we see this maybe move back up towards this previous resistance level, right, in this previous candle. So kind of staying up near this high here. If, on the other hand, as it's doing right now, we get a break below that technical toggle point, which has been a support level, and it stays below that level, then we could see this come back down and retest this level of support, which would be moving back in a downward direction, which would be consistent with this being a little bit of kind of blow-off type of spinning or a shooting star type of candle here on the longer-term chart. So momentum is now starting to build to the downside. So I think what we'll do in this particular case, given the technical direction that this is moving, is look at trading this to the short side, meaning selling the contract and potentially taking the contract off as it touches or hits this support level here, and exiting maybe on this little bit of a resistance if it goes the opposite direction. So I'm going to draw that level in here at about the 5.00003 level. So what we're going to do, right click, sell custom now with OCO bracket. And we'll just kind of do the same thing that we did before. We're just remembering now we're going in the opposite direction, right? So we're looking to get into this trade. We're going to float that a little bit here. We're going to say, look, I'm going to get out if this goes down to 4.98. Now, this is going to be a limit order. So this isn't going to be worked as an exchange-driven limit order. We're going to specify the limit order here in this particular case. So we're going to say, look, I'm going to take this down to 4.98. If this goes below 4.98, that limit order says buy this back if we can buy it back for 4.98 or less. So this gaps down or moves down hard, then that order is going to be in place. Now, the other side of that coin is this exit if price goes up. So we're going to call it 5.003. And this is going to be worked as an exchange-driven limit order, not a market order. We could put it in as a stop limit instead of just a stop market. But either way, it's going to run into that same challenge that there's the potential that it might not get filled. Now, this is moving on us, right? And selling it a little bit higher is fine. In fact, selling something when it's a little bit higher is generally preferable, right? That's the thing, right? You want to sell when things are expensive and buy them back when they are cheap. So this is kind of toggling back and it's going the opposite direction. We're almost at our stop now. And while I was talking and yapping about this particular order, it started to move in the opposite direction. So we'll see if this moves. I'm not going to fire this order off yet until we get this candle moving back below that support level, because my idea in this trade, and the way that we've set it up, is still looking for that short-term weakness, maybe back down to that support level. It's not cooperating. Oh, all right. Stand by, guys. I know that our technology is running into a challenge here, so hang tight, and we'll see if we can get this back. Okay. Cool. Just recovered. Okay. All right. Looks like we are back. Sorry about that. And in the meantime, this has moved right back up to our stop. So the challenge is we could get stopped out on this right away. Looks like YouTube was giving us a little bit of an issue there. So I have not entered this trade yet. But this is starting to make a move down to the downside. So stopping it at that point, that's going to be a pretty tight stop. So we're going to say, let's go up here to that 5.01. Let's adjust that stop a little bit and give ourselves a little bit more room to the upside if it does start to go against us. So 5.01, we're going to adjust that stop, and we're going to click on confirm and send, and we're going to read through this. So our buying power impact here, and just kind of go through this order. Again, we've got our exchange fees that we have to be paid in this trade, and our initial buying power impact is about $770 in this particular case. So the entry into this trade is and see, look, every time I keep talking, right? This starts moving in the opposite direction. Now, it didn't get to that point, but this is the frustrating challenge sometimes with short-term trading, is that it starts moving against you. And then do you change your trend direction, or do you stick with your conviction of the trade? And that becomes a challenge, right? Because now, do we take this as an upward trade? We've got to move above the high of this low candle. So if this closes up there, we might reverse this and look to take this up to the top. So we'll see where that candle closes in this particular case, and it closed above. So what we're going to do is we're going to delete that order, and we're going to come back in, and we're going to create this order again in the opposite direction. We're going to look for this to move back up to this high, 502. So we're going to right click, buy custom with OCO bracket, and we're going to look at targeting this upward movement, 502 on the upside. On the upside, we're going to make that good till canceled, And we're going to stop this out if it drops below this support level right here. Now, remember, again, the stop doesn't behave like a stop does with equities. The stop behaves in an exchange-driven fashion. It doesn't issue a market order. It creates an exchange-worked limit order in this particular case. So we're going to stop this if it goes below 4.99. We're going to make that stop at that 4.99 level. Good till canceled. And boy, it's just doing it. See, this is the frustrating part. But we're going to read through this order. I'm going to stop talking quite as much. Same risk. We're just going to the upside. And we're going to fire that order off. And we'll see if that order fills for us here in this particular case. Right? And now it filled for us. And we're moving that move to the upside. And it's starting to work against us. So this, again, this is going to be something we're going to pay attention to. So let's do this. Let's come back over to our chart. Let's change our chart to our futures grid, just kind of get a sense of what's going on today here as this market gets up and rolling. This is starting with the S&P 500, the /ES. Index futures, we can see that we're kind of getting this bearish engulfing candle almost. Roughly equal size, almost engulfing. We'll see if it gets to that engulfing point. But run into that resistance of the 200 period moving average here in this particular case, right? The NASDAQ, on the other hand, we saw that move to the downside. So we're starting to see maybe a little bit more weakness. This looks almost like an advanced block type of candle. RSI turning back down. A little bit of weakness there in the tech-heavy NASDAQ. We're seeing some movement on Apple and some of the other components of the NASDAQ today. And then the Russell 2000 ahead of the Fed meeting tomorrow. This is interest rate sensitive. Not that there's much of an expectation of movement on the part of the Fed, but this is kind of sitting still here at this particular point. We have a position on the micro contract, taking this to the downside as an offset potentially, or a hedge to our portfolio, which was fairly Russell 2000 or fairly small cap sensitive. So now that we kind of have a sense here what's going on, let's look at a couple of other things. Let's take a look at our single grid really quick. And I want to pop in here /VX. These are the VIX futures. And starting to see VIX futures kind of ticking back up again a little bit here. That would correspond obviously with VIX, and VIX coming back in a little bit. So a couple of questions about what's going on here with volatility in terms of that movement. And so volatility is starting to come back in just a little bit here, stepping up, moving to that 22 handle, roughly seeing a little bit of growth in volatility as we get this movement, right? Okay. So this is the S&P 500 broadly. So a couple of other things I wanted to pop into. I wanted to take a look at our monitor tab, and I wanted to see a couple of the positions that we currently have. We have a micro crude contract that has been working in our favor, and we might want to revisit that and take a look. But the other one that we had was this micro 2K, this M2K contract. We've actually got two contracts here that we are short, looking at trading this to the downside. And that has been working in our favor and is continuing to work in our favor. Because you remember what we did is we beta weighted our stock portfolio here to the M2K, right? And by adding that short futures contract position, the short two contracts in M2K, we're taking off about 10 deltas, right? So we're reducing the overall sensitivity of this portfolio, not necessarily by hedging an individual position, right? But hedging the portfolio as a whole. And we're doing that because this portfolio is relatively sensitive to small caps. It's got some small cap stocks in there. So hedging that risk, that small cap risk, by a short position in the E-mini or the micro E-mini on the Russell 2000, which is the short cap, the small cap index, that reduces the sensitivity. We're making this a somewhat apples to apples comparison here. And we've done this before, that beta weighting. It's important to remember, really two things with hedging. Three things. One is that this relationship, this beta weighting relationship, is not exact. It is theoretical. So you're not going to get one-to-one movement. You're not also going to get one-to-one reduction of risk when it comes to those deltas. But two, because these are theoretical, you may get a move in the futures and its corresponding deltas that's not reflected, because these individual stocks are going to have their own delta correlation to that index or to the futures contract. And that changes. That's a dynamic relationship. And number three, when we put on a hedging position, we're not expecting to make money in the hedging position, because we're using any gains there as a potential offset to what's going on in our overall portfolio, right? So any loss that we see in our portfolio, we're expecting to offset some of that by our hedge, not gaining on the hedge. If we were going to speculate in the direction of the hedge, then that's a different story. But using the hedge to offset an overall portfolio, that becomes a function of simply providing that protection. And traders don't typically tend to leave that hedging protection on for a long period of time, simply when the conditions exist to do so. Now, the other side of that coin is our MHG, our micro copper contract, which seems to be not working in our favor at this particular point, but we'll see how that goes. Let's come back over and take a look at that crude contract really quick. And we got, I think we got stopped out on our copper contract, which is fine. I mean, we had prepared for that risk. We'd managed that risk, and we're okay with that. So let's come back over here to our charts. Let's go to our future movers grid once again, and let's go to /MCL. Let's take a look at our crude oil contract. And we can see that in the short term, that crude oil contract breaking that support level here. But momentum's starting to pick back up a little bit here and kind of ticking back up in that positive direction. So we got a little bit of a divergence going on, a little bit of a bullish divergence happening here on crude. So we look at our position, and we are long crude through the MCL, the micro crude contract. So I'm okay, given what that chart is doing, staying long this contract at this point and seeing if we can squeeze out, maybe pump out a little bit more gain here, to use a pun. All right. So a couple of other things going on. I want to kind of stop and answer a couple of questions here, right? So have we ever looked at how MHG moves in correlation to the VIX? That's a really interesting question, Carol, and let's do that. So let's take a look at our charts. We'll go back to our single grid. And what I'm going to do is I'm going to go to my my Flask icon here, and I'm going to delete that ADX line, which is a trend strength line, and I'm going to add a comparison, or actually a correlation study. So we're going to add a correlation study here, and I'm going to click on the gear icon. We're going to change the symbol to VIX. So we'll take a look at VIX, and we're going to compare. Click on OK, apply, and OK. We're going to make sure that we are on /MHG. And let's take a look at the correlation between VIX and this copper contract. And you can see, if here's our positive correlation, here's our negative correlation. All right, our Japanese yen trade closed out. Looks like it did what we had expected it to do. Let's take a look here real quick. And there's our zero line, right, on the correlation. So above that line, it's a positive correlation. Below that line, it's a negative correlation or an inverse correlation. So what it would seem is that maybe more often than not recently, in the last 3 or 4 months, copper has been inversely correlated to volatility, which would somewhat make sense, given that, if it is climbing, if copper futures are going up, then the VIX is going down, because that would indicate perhaps economic strength. Economic strength might lead to certainty, or maybe a certain amount of stable perception about the economy, and that would lead to lower volatility. So it would make sense to have that inverse correlation, right? But it doesn't always do that, right? It doesn't always have that inverse correlation. Once in a while, we see that positive correlation there. So that's an interesting observation, and this would be an interesting observation to take a look at something like MCL as well. And you can see that more often than not is, if we put our zero line there, is positively correlated. So when crude's going up, the market's going, or the VIX is going up. So this might be more of a storehouse of value. All right, so a couple of things as we talk about this. The other one that I wanted to talk about is this one, /BTC. And I talked about this in the disclosures. I just want to give everybody a quick reminder that there are risks associated with trading derivatives products, including futures contracts, on cryptocurrencies that don't have a basis in a product to deliver, right? So here's what we've been seeing in Bitcoin futures, and you've seen this in kind of the market analysis and market commentary discussions, but look at what's going on with RSI. Two things I notice here. RSI is squeezing down towards that lower reversal zone, and it's sitting at this support level at this particular point after a couple of bear flags that we can probably draw here. And that support level would lead potentially, if we were looking simply at a symmetrical move to the downside here, let's duplicate that line, and let's put that down here on this, right there on, if this were to break down below, that's going to put this right back down, this Bitcoin futures contract, that's going to put it right back down here into what was a pretty good resistance level. We'll call it, for easy math, the 70,000 mark, right? So this does seem to be making kind of these 10,000 point jumps, right? 90 to 80, 80 potentially to 70, 70 down to 60 would put it at this next level of support. Markets like, people like big round numbers. That's not at all surprising in terms of a level of support. Doesn't mean that it'll go there. But a longer term trader, again, recognizing the risks of trading Bitcoin futures or any cryptocurrency futures, a longer term trader could look for kind of that close below the low of the high candle or cablode type of entry into a trade, and maybe that break of that support level moving down to this 70,000 mark just from those symmetrical jumps to the downside. So that is a possibility, right? So let's take a look, and a couple of questions. Well, wait a second, where is this relative to its moving average? Let's go to our Flask icon, SIMP, simple moving average, and we'll make that 200 periods, and we'll make that kind of a happy little green color and 3 points wide. Not that it's necessarily happy or unhappy, but it's above that 200 period, and you can see where that 200 period would sit if it were to break below that support level and maybe make that move to the downside. Now, the other thing to think about is RSI seems to be getting squeezed, right? So here's kind of the perspective. If this doesn't break below that support level, and you see a break of this diagonal downtrend line on the RSI, which hasn't broken for a couple of months, that could be impetus for a pop to the upside, right? Now, zooming back out, looking at the correlation to the VIX, this does tend to be somewhat more consistently inversely correlated. So when VIX rises, Bitcoin's going down. When VIX is falling, Bitcoin is going up, which doesn't make sense if you believe in the case for Bitcoin being an alternative type of storehouse of value relative to gold, right? Because gold tends to do better when volatility rises, when there's more uncertainty in the market. Gold tends to be that storehouse, right? Okay, let's see if that's true. Let's go to // GC, and we can see that again. There's maybe a little bit more of a positive correlation there, although it does tend to oscillate. But we do see gold breaking out today in that longer term chart. RSI kind of trending below, a little bit of a hidden RSI divergence here on a bearish standpoint, which maybe is more of an indication of a pause. But going into this FOMC meeting, going into the tariff issues, gold seems to be regaining some of that strength as kind of that safe haven, if you will. Not that it is necessarily or isn't, but let's go down to our futures movers grid once again. And here's our micro gold contract. And we can see what micro gold is doing, maybe in that short term, kind of making that bull flag move up near the top of that bull flag move, right? But on the short term, finding perhaps a little bit of a support level right here. Now, this is the micro contract. It's smaller than that big contract. Let's take a look at this. The notional value here is 30,377. The notional in the big contract GC is 303,000, so it's a tenth the size. But let's go to /MGC, which we've traded before in this particular case. We'll go back to our next grid here. And again, this is a similar situation to what we were seeing with copper, isn't it, right? That potential bounce up off of that support level. A break below that level could take this back down to that 30.28 level, but a possible bounce could see this move higher. So I'm going to look at this on maybe a little bit longer term perspective here. And I'm going to say, look, we've got this diagonal uptrend line. This may be simply a pause with that RSI divergence, but I'm going to look at getting in if the price of this contract goes back above this candle, right? That classic kind of close above the high of the low candle type of move, and look to trade this back in that trending direction, not necessarily looking at seeing this just taking off at the top there. So we're going to stop this if it breaks out down below maybe a support level somewhere in this range. We're going to give it a little bit of room to move potentially to the downside, but we're going to look at taking this as a trend trade. A break down to this level at the 30.33 would be a break of that diagonal uptrend line. So that's the trade that we're going to look at here. I'm going to come up here, we're going to right click, and we're going to do a buy custom with stop in this particular case. But we're going to do this as a buy stop. And the reason that we're going to actually, you know what I'm going to do? I'm going to do this as a conditional order, because again, a buy stop, just like a sell stop, is going to be worked as a conditional order by the exchange. So I'm going to make this a conditional based on that break of 30.40. We'll call it 30.40. So I'm going to say, look, let's enter this trade. But see, then, you know what? Even if we put it as a market order here, and then we do it as a conditional, it's going to end up at or above. If we go at or above that, it's going to get worked as a conditional order, because we can't send a market order. So that's a good reminder here. So we might as well, in this particular case, thanks for letting me be a little bit stream of consciousness here. Let's do this as a buy stop, which is going to then work as a limit order at 30.40. There's our trigger. And we're going to say stop at 30.40, and we're going to work that as an exchange worked limit order. Then we're going to stop this on the other side at 30.33. So we'll make that 30.33. If it goes below 30.33, then we're going to make that a stop and also worked as an exchange driven limit order. If this doesn't do it today, I don't want to get into this trade. I want to reevaluate. So I'm going to leave the first order as a day order, second order as a good till canceled, and we'll click on confirm and send. We can see the impact to our buying power and the transaction costs. And we'll put this order out there and wait to see if that fills. and it's not filling at the moment. In fact, it's going against us like everything is doing today, right? So, guys, here's what we've done. We looked at that micro gold contract that's waiting. The copper contract worked against us. Our 6J contract worked a little bit for us. In fact, that worked in our favor. We got our trade out of that, and that did what we expected it to do. By the way, if you want to learn a little bit more about futures, you can come on over here to Trader Talk's webcast channel on YouTube and dig a little bit deeper into the topic. And you're going to find a bunch of webcasts that talk about trading futures. Michael Fairborn, Brent Moores, James Boyd. And by the way, this weekend coming up, I know some of you are going to be there, hopefully. But coming up this weekend, we're going to be in Chicago, Illinois, actually in Schaumburg, for those of you who are familiar with the area. And Friday and Saturday, we're going to be doing our Advanced Option Strategies workshop. It is full right now. But we do have others that are coming up. We've got one coming up in Dallas and then one coming up in Anaheim, California. But on day 2, we actually talk about futures and futures trading in that advanced options workshop. So we'd love to see you there and have you join us for that. But once again, my thanks to Michael Fairborn, who did a great job kind of keeping up with my stream of consciousness this morning as the market was kind of moving around in some of the things that we were looking at. And of course, to our great production staff for helping us get through some of those technology challenges. And of course, to all of you, thank you for being here. And we will see you again very soon. Look forward to seeing you all in our full lineup of webcasts today here on the Trader Tax webcast channel. Click on that subscribe button and the like button if you haven't done so already. And we will see you again very soon. Take care, bud. Bye-bye.